What's up, guys? Welcome back to another episode of the Cash Flow Chronicles podcast. As always, I'm your host, Shawn King, and we are back today to talk about some alarming facts about Social Security and retirement. Because at the end of the day, the whole idea behind this podcast, this YouTube channel, all of this stuff is to help get you educated. So one, you know about infinite banking because that's super important. I think it's a great base foundational tool to utilize to help grow you the portfolio, the cash flow, the guarantees that you are going to need heading into retirement, because a lot of these things, these government things are, let's call them kind of falling apart right now for many, many reasons. So what we're going to do today is we're going to discuss something that some of you might already be involved in. You might be coming up close to with your retirement, or you may be like me in the younger millennial generation and you're like, I wonder if this thing is going to actually be around when I get there to retire. Now, retire for me essentially just means that I'm no longer doing what they want me to do. I'm going to start doing what I want to do, whether that be working still, whether that be golfing all the time, traveling with, your spouse, your loved ones, going and spending time with grandkids. It really, looks different for everybody, but I'm not saying retirement means you're just no longer working. I'm saying retiring from that job that you don't like to do so that you can do the things that you do like to do. Now, how are we going to do that? Having enough cash flowing assets to make sure that all of your bills and expenses are paid and you can live the life that you want to live. But what I want to point out is 5 alarming facts about Social Security and retirement statistics in the U.S. today. And hopefully you're hearing this well before you're getting to that point of, hey, I'm already retired, or hey, I retire in the next year or two, so you can take a little bit of action. But let's see what some of these alarming facts are and see how we can address them to make sure that you're in the best position possible come retirement, air quotes, retirement time. Okay, so number 1 is Social Security's trust fund is depleting. So this is definitely scary for a lot of people, especially people in their mid to late 50s right now who are going to be entering retirement here soon. So the Social Security Administration's 2023 Trustee Report forecasts that the Old Age and Survivors Insurance, OASI, trust fund will be depleted by 2033. That's 8 years from now. So once this happens, Social Security will be funded solely by ongoing payroll taxes, which cover only about 77% of promised benefits. Yikes. Okay. So what does that mean? What are some of the implications with that? So retirees could see a 23% reduction in their monthly checks if no reforms are enacted. Now, I'm sure they'll try some things. Maybe they'll increase taxes, all of these different things to kind of combat that. But we are not on a good trajectory right now. And could you imagine if you thought you were going to get, let's just say, we'll use $1,000 a week. And now they're coming in and saying, you know what, Gary, you're not getting $1,000 a week. You're getting $770 a week. I hope that you can kind of figure that out on your end, but that's what it's going to be. But I worked so hard to get that $1,000 a week. I thought I was getting $4,000 a month. I thought this is what was going to be, good to go. And no, sorry, we just kind of mismanaged this money, and we weren't really prepared. So something that's going to be of major effect is for younger workers, like, again, millennials, people in their 40s, even people probably in their early 50s. There's a lot of uncertainty about the program's reliability. That's, I would hope, leading many people to seek alternative retirement saving strategies like the infinite banking and stuff that I frequently talk about, annuities, that type of stuff. why is this important, Shawn? Well, for those heavily dependent on Social Security, the potential reduction in benefits could mean significant financial hardship during retirement. I'm going to talk about some stats here in a second, but it's crazy how many people rely for a large portion of their retirement strictly on Social Security. It was never meant to be that. So that kind of leads me into point number 2 here. Problem number 2 is heavy reliance on Social Security by retirees. So around 90% of Americans age 65 plus receive Social Security benefits. And for 40% of retirees, it provides over 50% of their income. For about 12% of them, it's their only source of income, which is so scary. If I didn't have any other money coming in from anything else, and you told me that in 8 years you were going to be taking what I was earning or receiving and cutting it by 23%, basically a quarter of my money, shit, man, I'd have to really recalculate my so-called retirement and heavily consider if I need to pick up another sort of side gig or something. So break this down. Why this matters is, of course, the heavy reliance on Social Security underscores the importance of diversifying your income sources for retirement, such, as investments, annuities, like I already mentioned. I mean, this thing that you thought was going to be there for you when you really needed it, that kind of like support system, that security blanket. Well, now they're like, hey, you have a security blanket, but we're only giving you like 3/4 of the security blanket. So you're going to be missing a big portion of it. So number 3 would be average benefits are barely livable. Now, the average Social Security retirement benefit is about $1,900 a month as of 2024. That equates to about $22,800 annually. This amount is close to the federal poverty line for many retirees, especially as inflation erodes purchasing power. So we've talked about this many times before. Your dollar is only getting weaker and weaker. So that's why I'm not a huge fan of these qualified plans where we're kicking the can down the road on taxes and we're deferring our money to a later date where they'll let us know what we're going to be taxed at, because the dollar's only getting weaker and weaker. Your dollar is as strong as it is ever going to be today. So let's talk about some implications. We've got rising costs for essentials like healthcare. That only goes up. Housing, food, meaning essentially many retirees are going to struggle just making ends meet. You got unexpected expenses like medical bills. Those always seem to happen more frequently the older you get. Home repairs, something always happens with the home. And then, things like this can really devastate retirees living on a fixed income. If you're like, hey, I got $1,900 a month, some's got to go to food, some's got to go to healthcare, medical bills, housing, all this stuff, and you don't have much of anything else supporting you, well, you're going to burn through that $1,900 really quick, and it's going to be even quicker here in the next 5 to 10 years because of inflation, the power of your dollar. So why this matters? Of course, Social Security provides a safety net, like I mentioned before, but it's insufficient as a standalone solution, emphasizing the need for personal savings and investments. Number 4 is the rising age of retirement. So if you didn't know this, the full retirement age for Social Security has been gradually increasing. I'm sure you probably knew that, but it was 65 years old for those born before 1938. But for those born in 1960 or later, it's now 67 years old. Early retirement at age 62 is, of course, still an option, but that comes with permanently reduced benefits up to about 30% less than what you would receive. So it's like, hey, do I wait and take the larger amount, or do I take what I need right now because I'm ready to retire? So people are really just working longer now to maximize benefits, which, of course, the older you get, normally the function in your body, all of that stuff starts to decrease. Your physical strain, your mental health, all of that just kind of goes downhill as the body gets older and older. So delaying retirement may limit the time individuals have to enjoy their later years or care for aging family members. At the end of the day, why this all matters is the shift in the FRA reflects longer life expectancies, but also pressures individuals to work longer, making it crucial to plan for a healthy work-life balance leading up to retirement. With all these advances that we have in medicine, people are just living longer and longer. If you're thinking, all right, well, my parents lived until they were 75, 80, chances are that you're going to probably live into your 80s or 90s. And if you haven't planned properly for retirement and you get to that age, you're like, well, I don't have any money left to use. And what I was receiving from Social Security with the cost of everything increasing on a, annual basis, essentially, like I don't have enough. So what do you do at that age? It's really hard to go back to work in your 80s. Nobody really going to want to hire somebody that's old. Unfortunately, ageism is a real thing. But it's like, what do I do then? Do I rely on my kids? Do I rely on my grandkids to try and support me? It's just a lot that can be overwhelming and could have been sorted with some pre-planning in your earlier years. But again, I get it. Nobody really talks to you about these things, so you don't know what to expect or what to do. So number 5, last but not least, is most Americans are underprepared for retirement, just like I was talking about. So studies reveal that nearly 25% of adults have no retirement savings. I'm going to repeat that. 25% of adults have no retirement savings. But those will be the people that are living off of essentially the tiny little bit of Social Security they get, and they're just at that poverty line for the rest of their so-called retirement life. And those who do save often fall short of what they actually need. So here's some other wild numbers. Is the median retirement savings for individuals age 55 to 64 is just $120,000. $120,000. At a 4% withdrawal rate, that translates to about $4,800, not $48,000, $4,800 annually, which I don't know about you, but I can't live off of $4,800 a year. I don't think I could get $4,800 worth of groceries to keep me alive in a year. So it's unbelievable to think that this is so many people's situation. So without any adequate savings, many retirees face financial insecurities, relying heavily on, again, Social Security and potentially working past traditional retirement age, working far past traditional retirement age. I know people that are in their 70s, late 70s, even early 80s that are still working because they just don't have the ability to give up that paycheck, because then they won't have the money necessary to live. So a lack of preparation, of course, increases the risk of outliving savings, especially with rising life expectancy. So we're living longer, inflation is going up, all of these things, your dollar is getting weaker. And if you didn't have any plans in place, well, you're going to be SOL. So let's talk about some key takeaways and kind of what you can do if you want to make sure that you don't end up in a situation like this. So number 1 is you want to diversify income streams. Don't rely solely on Social Security. Build additional savings through other vehicles like participating whole life, annuities, real estate, or if you must, if you're down with a little bit of risk and whatnot, your common qualified plans. I personally would suggest a Roth IRA over any other of them, but that's going to have some limitations on how much you can put into it because it is a tax-free vehicle. So the government, of course, is going to limit you. Number 2 is plan for rising costs. account for inflation and healthcare costs in your retirement budget. Understand that your dollar is going to buy less later in life, so we need to kind of plan for that, as well as healthcare, because of course that is going to be something that you have to deal with at that time. We don't get healthier as we get older. At least most people don't. Number 3 is something you can't really control right now, but you can talk to your kids, your grandkids, and maybe depending on your age, you can do something about it right now. Start earlier. The earlier that you save and invest, the more time that your money has to grow. So again, not something that you can really turn back the clock with right now, but if you start educating your kids and your grandkids, like I mentioned, you can make sure that they're going to be in a much better position than you are at your current age, hopefully. Number 4 is stay informed, keep up to date on Social Security changes and advocate for reforms. You can do that through ssa.gov, Social Security website. Then number 5 is seek professional advice. You want to work with a professional to create a personalized retirement plan for you. So that was all some kind of like Debbie Downer negative stuff. And you're like, all right, Shawn, well, what do I do? Well, I'm going to make a suggestion, a couple of different suggestions, but I want to discuss with you guys why I believe utilizing infinite banking through participating whole life insurance policy could be a huge help. So first of all, I want to break down again, of course, how this works. So maybe this is your first time listening to this podcast and you're over here like, Shawn, why in the hell would I use whole life insurance to help set myself up for retirement? Isn't that for dying? Well, let's break down how it works. Participating whole life insurance policy builds cash value over time. This cash value can be accessed via loans or withdrawals, providing a tax advantage source of income during retirement. So the policy continues to earn dividends even when loans are taken out, helping sustain consistent growth over a long period of time. Now, some of the benefits are loans from the policy are tax-free and don't count against income thresholds for Social Security or Medicare, or unlike other retirement accounts, there are no contribution limits or RMDs, required minimum distributions. Number 2 is you want to recycle wealth through policy loans. So how that works is you borrow against your policy's cash value to fund investments like real estate, business ventures, while maintaining the policy's compounding growth, because again, non-direct loan recognition, meaning they don't recognize when you take money out of the policy and go invest it elsewhere, that money that you thought you took is actually still in there, continuously earning you interest for the rest of your life. But what you do want to do is pay yourself back with interest, ensuring you maintain control of your money instead of relying on traditional banks and their high-ass interest rates. To give you an example, if you want to use the cash value to purchase a rental property, generating passive income from that rental property, then you pay back the policy loan using the rental income while the property appreciates in value. Number 3, you want to create a retirement buffer. So how exactly this works is the cash value in your policy can act as an emergency fund during retirement. You can use it to cover unexpected expenses like medical bills or home repairs without disrupting your current investment portfolio. Some of the benefits from this: by accessing cash value during market downturns, you avoid selling investments at a loss, allowing your portfolio to recover. We call that essentially sequence of returns, which just means that we want to make sure that you are not selling low and getting that double whammy from losing out on your investment and also selling at the worst possible time. Number 4 is protect against inflation with dividend growth. So participating whole life policies pay dividends. I'm not going to say it's guaranteed because it's not. We work with companies that have a very long 120, 130, 140 year track history of never missing a dividend payment to the policy owners. So those policy dividend payments can be used to purchase additional paid up insurance, which in turn grows the policy's cash value by default. Some of the benefits from that is over time, these dividends compound and they help offset the effects of inflation, providing a larger pool of money for you at retirement, which I think is the overall goal. Number 5 is to optimize tax efficiency. So how that works with a whole life policy is cash value withdrawals up to the policy's basis, which is basically the amount that you've paid in premiums, are tax-free. Policy loans are also tax-free if properly structured, which is something that we would help you with. Unlike taxable accounts, gains inside the policy grow tax deferred. So we can teach you how to get the absolute most out of your policy without paying any taxes and still leave behind a juicy death benefit to your loved ones if you so choose. Some of the benefits from this is these tax advantages reduce your overall tax burden in retirement and increase the longevity of your wealth. Number 6 is combine it with other retirement accounts. So, annuities would be a prime example because they provide a guaranteed payment for life, or like I mentioned before, if you like to have a little bit of risk in your life, you can use whole life insurance in tandem with like a 401k, an IRA, Roth IRA preferably, or some other sort of savings vehicles. And then you could take policy loans to fund large expenses, allowing tax-deferred accounts to continue compounding as long as you don't run into some bad years. But some of the benefits from this strategy would be provide you with some flexibility, of course, provide you with control, enabling you to navigate unexpected expenses without incurring penalties or taxes that you would from your said qualified plans. Number 7 is leave a legacy. And how that works is the death benefit from a whole life policy provides a guaranteed tax-free payout to your beneficiaries that avoids probate. This ensures your loved ones are taken care of while avoiding the complexity of estate taxes. Super important. Benefits would be, even if you use cash value during retirement, the death benefit remains intact, creating multi-generational wealth for your family. And number 8, last but not least, is, of course, you want to hedge against market volatility. So how a whole life policy plays into that is the cash value of said whole life policy is not tied to market performance, providing a stable and predictable asset. I like guarantees. I like certainty. I like stable. I like predictable. I like the fact that whole life isn't sexy. It just gets the job done. And the benefits from this is this makes whole life insurance an excellent tool to diversify your retirement strategy, reducing reliance on potentially volatile investments like stocks. So I'll wrap it up with a real world example just to kind of give you an idea of what's possible here. So a quick scenario, we got a 45-year-old professional who starts a whole life insurance policy and contributes $20,000 annually. By age 65, the policy has grown to $700,000 in cash value. These are just kind of random generic numbers. If you were banking with the policy, all of this stuff can be completely different. But you may be thinking $20,000, gosh, that's a lot. That's money that he can use or she can use throughout their lifetime. So it's not like putting something into your qualified plan, your 401k, where you're like, hey, it's in there. Well, what if I need it to, pay for my car breaking down? Well, you're going to have to take that sad story somewhere else, because people over at your 401k aren't going to give a shit about that. But if you got that money in your participating whole life policy, well, go right in there and use that bad boy. So you got this $700,000 in cash value. You can use those loans to fund your child's education if people are still going to school at that point in time. And then, you could buy a rental property. You could pay themselves back with the income from the rental property. And, you're kind of doing that all throughout your 20 years between 45 and 65. And then at 65, you can draw something like $40,000 annually from the policy for retirement income. The death benefit ensures your family receives a legacy even after decades of using your policy. So hopefully that all made sense. Again, I never want to just come in here and talk to you guys about the problems. We always want to try and provide solutions. And I know oftentimes the solution sounds like it's some form of infinite banking or utilizing participating whole life in some way or another. And that's because if you can qualify for it, I think it is the best foundational piece that you can add to your retirement repertoire to make sure that you are going to be in a great place when that time comes and you do decide to hang it up. So if you're interested in learning more about infinite banking and how it can be used to help supplement your retirement, by all means, please don't hesitate to reach out. Head on over to our website, legacylifeandretirement.com. Book yourself a free cash consultation, which is just you, me, you, and family members, whoever may be, hopping on the phone and just kind of going over what it is that you want, what you're looking for, what would your ideal situation be, and kind of deconstructing things from there so we can understand what exactly you need to be doing to get to where you want to go. We get involved in very low to no risk type of, I don't want to call it, life insurance isn't an investment in any way, but we utilize the cash value in our policy in low risk investments outside because, again, we like a lot of certainty and we want to know what's going to be happening with our money, with our policies, and with the future. So if you want to find out, again, how this information can benefit you in the long run and how you can get something set up for yourself, for your kids, for your grandkids, whoever it may be, so they don't have to worry about this when the time comes, then as always, book your free cash consultation. The information is free, but the knowledge is priceless. Look forward to talking to you guys soon. Peace.